Is investing the same as taking a chance? Most of the people I've heard say they won't buy stocks or invest in mutual funds because they don't like to gamble. Investing and gambling, on the other hand, are not the same thing. When gamblers go all in, they take a risk that could pay off or leave them with nothing. Emotions are what cause people to gamble. On the other hand, investing is a well-thought-out process. In today's videos, we are going to talk about trading and investing versus gambling. Let's get started. How often have you heard someone talk about money and say, investing in the stock market is the same as gambling at a casino? Investing and gambling do both involve risk and choice. Specifically, they both involve putting money at risk in hopes of making money in the future. But most people only gamble for a short time, while investing in stocks can last a lifetime. Investing is the process of putting money or capital into an asset, like stocks, with the goal of making a profit or income. Investing is based on the idea that you will get money back in the form of income or a rise in price. When it comes to investing, risk and return go hand in hand. Low risk usually means low expected returns, while high returns usually come with higher risk. Investors always have to choose how much money they are willing to lose. Some traders typically risk 2 to 5% of their capital on each trade. Long-term investors hear all the time how important it is to spread your money across different types of assets. But risk and return expectations can be very different, even within the same asset class. This is especially true if the asset class is big, like the equity class. For example, a blue-chip stock that trades on the New York Stock Exchange and a micro-cap stock that trades on a small exchange will have very different risk-return profiles. Trading, on the other hand, means buying and selling things like cryptocurrencies, stocks, bonds, derivatives, and other financial instruments. There are many different ways to trade, like high-frequency trading, day trading, etc., and each has its pros and cons. For many people, investing can feel a bit like gambling because of the risks involved. In reality, though, there is a big difference between the two. In fact, let me answer the very important question: is investing gambling? Before we go any further, investing is not a game of chance. Even though both involve risk, when you invest your money, you get something in return that you own. On the other hand, gambling is a bet between two people that depends on a certain outcome and ends with one person winning and the other losing everything. So, the main difference between investing and gambling is that when you invest your money, you are buying something of value. When you gamble, on the other hand, you only get something if you bet on the right outcome. Gambling means betting something on something that might happen. It's also called betting or wagering. It means putting money on an event whose outcome is uncertain and depends a lot on chance. Like investors, gamblers need to think carefully about how much money they want to put in play. In some card games, pot odds are a way to compare your risk capital to your risk reward. This is done by comparing the amount of money needed to call a bet to the amount of money already in the pot. If the player likes the odds, he or she is more likely to call the bet. Most professional gamblers are quite proficient at risk management. They look into the past of a player or team or a horse's ancestry and track record. Card players often look to the other players at the table for clues about how to win. Good poker players can remember what their opponents bet 20 hands ago. They also watch how their opponents act and how they bet in the hopes of learning something useful. Over the long term, the stock market always goes up. This doesn't mean that a gambler will never win big. And it also doesn't mean that an investor in stocks will always make money. It's just that if you keep playing over time, the odds will be in your favor as an investor but not as a gambler. Here are the few more differences between the two. Investing is based on research, while gambling depends on luck. When you invest, you need to do a lot of research. All that matters in gambling is how you feel. To invest in the right assets, you need to do enough research and know how much risk you are willing to take, what your goals are, and how much money you have. On the other hand, you don't have to do much research for gambling. Only one piece of news gets through to the market, and the market is driven by how people feel. People invest, though, based on tips, rumors, and sometimes research. If you want to buy a futures contract, you might have to do more research than if you wanted to buy stock. So there isn't much difference between them. People often think investing is the same as gambling because of this. Investing gives ownership of an asset, gambling doesn't. When we invest in mutual funds, shares, or any other asset, we do become the owner of that asset. When you put your money into gambling, you either get more money or nothing. At the end of a gambling transaction, no one owns any of the things that were won. But when you invest, you can say that you own an asset. Investing is long-term and gambling is short-term. Most of the time, investing is done for the long term. For a set amount of time, more than a year in the case of equity. Only investing in debt funds, short-term bonds, and money market instruments is an exception. Gambling or trading only happens during trading hours, and it can last for a few weeks or months at most. Investing involves less risk than gambling. Most gambling is based on the idea of going all in. By taking a chance, a person either gets something in return or ends up with nothing. There aren't many ways to get back the money you lose when you gamble or trade. When investing, you can always move your money from one fund or asset to another and get back the money you lost. If you lose in a game of chance, you lose everything. One can make up for money lost in trading or gambling by doing more of the same, but only if more money is added to keep doing the same. When investing, you can take your money out and put it somewhere else, even if you lose it. No one loses all of the money they put in. They could lose. Investing is well planned to reach a goal. Gambling isn't. When you invest, you have a goal in mind: to save up for retirement, college for a child, or a trip. People bet to make more money, and most of the time they do it just for fun. One can also set goals for the future based on gambling, but the risk is too high, and it will only work if they are lucky. Investing isn't addictive, gambling is. People think that gambling is a very bad mental condition. Some groups see problem gambling as a problem and do something about it, although no such problems have been found with investing. Instead, investing is seen as a good way to manage your money for a healthy financial life. That's all for today. I hope you liked the video. If you did, make sure to hit that like button and subscribe to the channel so that you never miss any amazing video from us.